Welcome to The Explainer. I'm absolutely thrilled you're joining us today because, well, we're taking a pretty fascinating journey through time. We're looking at something that pretty much guarantees a collective groan today. Yep, taxes. We're going to compare how we handle them right now in our modern hyper-connected world to how they were handled way back in ancient India. Based on some incredibly insightful research, we're unpacking the whole evolution of taxation. We'll look at the philosophy, the mechanics, and honestly, the sheer complexity of it all. It's a total eye-opener, and I guarantee it might just change how you think about your next tax return.
So let's start with this absolutely brilliant ancient metaphor from the scholar Chanakya. He said, taxes should be collected like a bee taking nectar from a flower without harming its petals. Just let that sink in for a second. Think about your last tax season, the mountain of receipts, the confusing portals, that sheer panic of an impending deadline. Did it feel like a bee gently taking nectar? Yeah, probably not, but this profound ancient philosophy set a completely different tone for civic duty. It treated the taxpayer's livelihood as something delicate, something that literally had to be protected at all costs.
All right, here's our roadmap for today's explainer. First, we're looking at the philosophy of ancient taxes. Then we'll see how ancient taxation worked in practice. After that, we'll fast forward to the modern digital tax shift, put the two eras head-to-head in ancient wisdom versus modern complexity, and finally wrap things up with a section we call the bee and the flower.
Okay, let's jump right into Section 1, the philosophy of ancient taxes. You see, the entire ancient system was rooted in a text called the Arthashastra, written by Chanakya. And the foundational mindset here wasn't about legal threats or penalties at all. It was actually about dharma, or moral duty. Paying taxes was genuinely viewed as a righteous act, not some kind of punishment. But, and this is absolutely crucial, it was a two-way street. The king was strictly instructed to only take what the citizen could easily afford. In return for this dharma, there was a rock-solid commitment to the public good. Every single coin or grain collected had a designated purpose, mainly to strictly protect the kingdom and help the poor. No wasteful spending.
And honestly, the system was beautifully targeted and logical. There wasn't one massive, confusing tax code to decipher. They broke it down simply, based on a person's actual livelihood. First, you had paga, which was the main tax paid directly by farmers from the crops they grew. Then you had kara, a property tax collected from villages and orchards to keep local administration running smoothly. And finally, shulka, which was a trade tax, kind of like our modern customs duty, collected when merchants brought goods into the city. That's it. It was clean, it was categorical, and most importantly, it was incredibly easy to understand.
Moving right along to Section 2, how ancient taxation worked.
So, you might be wondering, how did they actually figure out the tax rate back then? Well, they used the Baiga rule, and it was a remarkably straightforward split. Farmers paid exactly 1/6, so roughly 16.6% of their harvest to the king. The vast majority of the pie stayed right there with the person who actually worked the land. There were no confusing tax brackets to jump through, no hidden surcharges, just a flat, totally understandable 1/6.
Now here's where the ancient system shows its incredible empathy and flexibility. Think about it. If the weather was great and the crops were huge, naturally that 1/6 amounted to more, so the king got more. Pretty fair, right? But what happens if the rains failed? What if there was a devastating drought? The tax simply dropped to zero. Zero. The farmer paid absolutely nothing. The system had this brilliant built-in safety net that naturally protected poor farmers from going bankrupt. It dynamically adjusted to the actual reality of the taxpayer situation.
And the collection process was just as grounded. There were no middlemen taking a cut. Royal officers physically visited the farms, measured the crops, and collected the grain directly. For the farmer, this meant complete transparency. They could literally see their grain going into carts to feed the army or be stored for emergencies. It was a tangible, visible output. And perhaps the most envious feature for us today? Zero paperwork, absolutely no complex math, and definitely no need to hire lawyers or accountants just to pay your dues.
All right, fast forward to today. Let's look at Section 3, the modern digital tax shift.
So let's look at our modern income tax slabs under the new regime. Instead of taking a physical slice of a harvest, the government today taxes your monetary income in a tiered structure. Up to 3 lakh rupees is completely tax-free, but from there, as your earnings increase, the percentage you owe climbs steadily. 5%, 10, 15, all the way up to a 30% tax rate for income above 15 lakh. It's designed to tax higher earners more heavily, which makes sense, but it immediately introduces these dense layers of mathematical complexity that the ancient farmer simply never had to worry about.
And then we get into modern tax terminology. It's practically a whole new language.
Take ITC, or Input Tax Credit. Basically, this is a mechanism in our indirect tax system designed so a business owner doesn't end up paying tax twice. Essentially, if you paid tax when buying your raw materials, you get a discount when paying tax on the final product. Economically, it makes absolute sense, but requiring citizens to track, calculate, and claim these credits, that shifts a massive administrative burden right onto the shoulders of the everyday business owner.
And this complexity builds in our everyday purchases too, through the GST, the Goods and Services Tax spectrum. You can see how our indirect taxes scale up dramatically based on what the item actually is. Basic needs, things like spices and life-saving medicines, sit down at 5%. Standard goods move up to 12%, while most items, like electronics or software services, hit 18%. And finally, luxury items like big cars face a hefty 28% tax. It is a highly calibrated system meant to be fair across different wealth levels. But man, it requires massive digital infrastructure to track and enforce every single transaction.
Which brings us to Section 4, Ancient Wisdom versus Modern Complexity. When we put these two eras side by side, the contrast is really stark. The ancient system operated on dharma, that moral duty. It traded in physical goods with incredibly high flexibility, literally waiving taxes entirely if crops failed. It was simple. The modern system, on the other hand, operates on digital money governed by very strict laws. It has extremely low flexibility, the rules are fixed, and if you miss a payment, you're getting hit with fines and late fees. The complexity has just skyrocketed.
And this massive complexity gap inevitably leads to what we all know as tax filing stress. Because the modern digital slabs and structures are so incredibly intricate, we now require highly trained experts like chartered accountants just to help us figure out what we actually owe. The burden has shifted completely from a gentle collection at the farm to sitting in front of glowing screens late at night, surrounded by a mountain of receipts, terrified of making some digital mistake that could cost you thousands in penalties. Plus, this complexity breeds some very specific modern challenges. Because taxes are high and the rules are dense, tax evasion remains a massive issue, with people actively trying to hide income in cash. Then there's the technological hurdle, government portals crashing on the literal last day of filing, causing massive anxiety, and often resulting in totally unfair late fees for citizens who are just trying to comply. And fundamentally, there's a massive lack of awareness. Our schools rarely teach students how to actually file taxes, which means people enter adulthood completely blind to basic, mandatory financial laws.
Let's bring this all together in our final section, Section 5, the bee and the flower.
The final takeaway from our source material is really both a critique and a hopeful directive. It fully acknowledges that our modern digital systems are undeniably powerful. They can track billions of transactions and fund massive national projects. But they desperately need to be made simpler and friendlier, maybe taking a page straight out of that ancient playbook. The core message here is that taxation should feel like a contribution to your society, a shared public good, not an anxiety-inducing headache.
Which leaves us with this final, vital question to ponder as we close out today's explainer. Can our incredibly powerful, highly complex digital systems learn to act a bit more like that ancient bee? Can they efficiently take the nectar necessary to keep the hive alive without stressing or harming the delicate flower that provides it? It's a fascinating challenge for the future of taxation. Thank you so much for joining me today, and keep questioning how the systems around you are built.